Udaya Kumar, Managing Director with the Credit Access joins us to walk us through that, what is happening to economy, his business, and how environment is having impact on the way he has conducted business. Mr. Kumar, good morning. Thank you for joining us. Now, despite a broad-based economic slowdown, even the which is even reflective in Q1 GDP growth, the MFI sector continues to outperform. What is contributing to this outperformance?
I think it's very important. There are two important components for this. One is about the demand and one is about the liability requirement, actually, the funding requirement. So demand per se is quite unique in this industry because the lot of customers or low-income households still still operating under the informal economy where they don't get the formal financing. So microfinance is the vehicle for them to come out from informal borrowing to formal borrowing, which tentatively what we look at almost 100 million, 75 to 100 million of low-income households still out of the formal finance sector. So therefore, the availability of the new customer to acquire is quite high. So demand is quite high. So therefore, the growth is possible, subject to funding availability. So funding is a thing which is, again, very unique for microfinance, where it is always a ALM positive industry, where the portfolio is short term as well as the borrowing is a long term. So which makes there is no difficulty in ALM mismatch in this sector. From a bank side, every banks in India are mandated to provide 40% of their funding to a private sector lending, which microfinance is the important vehicle for them to lend to this sector so as to meet their private sector obligations. So this is a unique position for microfinance industry, where funding supply is available from banks, as well as the demand is quite intact in this informal economy, to move the informal economy to formal economy, which is a unique benefit. Therefore, you can see that microfinance grew almost 39% in the last 12 months as of Q1 FY20. I think that's a quite unique position here.
Microfinance and tiny size loans rose 52%, but being a rural player, how are you assessing demand and credit growth at the bottom of the pyramid?
See, this microfinance is basically given to the informal borrower and move them to a formal borrower. What we give is very small ticket size, which is maybe 25 to 30,000, where the cash flow is based on their existing income, which is based on labor or the small businesses. We are able to do at a ground level to assess their income well before providing the money, along with the social collateral as a group lending mechanism. And the demand is intact, so that is why the growth is not a difficulty, subject to funding availability, which is quite well here. So therefore, assessing them is not difficulty, because we do one-to-one conversation with them and understand their cash flow before lending to them.
Okay, what will be your focus area for FY20? What's the AUM growth that you're targeting as well going forward?
Our focus area is going to be the consistent delivery QOQ, including the efficient way of business, and grow contiguously in the districts around what you are operating, so which will help us to grow our infrastructure by 20-25%, which will help us to grow. Our estimated growth is about more than our aspiration is to grow beyond 35% this financial year, and we will be able to estimate around 425 to 450 crores of profit this year.
Okay, it's been a year to the IL&FS crisis. Has the liquidity situation improved in the NBFC ecosystem? Have the government measures been of help? According to you, how much more time do you think these will take to yield the desired results?
These measures are particularly for NBFCs, whereas NBFC MFIs we don't see this is this very major impact because of ILF crisis. But the benefit out of these measures, one is guaranteeing for the pool to sell to the public sector bank, or additional funding from the banks with the higher limits from the banks, which both help to NBFC to tide over the crisis. Whereas for us, like Credit Access Grameen, the funding is not a problem because our lender has been constantly giving us the money. Plus, we have been leveraging from our international network, particularly from our promoter side. We are able to leverage international funding also, which is further adding to our long-term funding, which will help us to grow based on our aspirations.
Right. So how is it that you see funding environment right now? Because, you know, even though banks have started passing on the rate cut benefits, but there still seems to be a significant lag. What is your own outlook here?
Our funding cost has not increased except for one quarter for that particular quarter. If you see across the year, our funding cost is stable. And we don't see the funding cost is increasing going forward. Probably with the lag is by and large already done. I think there's a mandate from the RBI also to pass on the interest reduction to the ultimate consumer. I think within this or 1 or 2 quarters, there will be more price cuts are expected from the banks to ultimate customers, including the lenders like us. So we expect the pricing to come down in the next 1 to 2 quarters.
Right. You also target to meet about 40 to 50% of your funding requirement via foreign sources. Given this backdrop, how is it that you see your borrowing mix changing in, say, the next 1 to 2 years?
This will help us to enhance our long-term funding. It will further improve our positive ALM actually. So over a period of 2 to 3 years, we would have 30 to 40% of the long-term foreign borrowing and 40 to 50% local domestic banks borrowing, maybe 10-15% is a long-term FIs within India. So these were the mix we are looking at in the next couple of years, which will strengthen the ALM position of the company.
Now, any branch expansion plans? What are the geographies that you're looking at in terms of expanding your footprint?
So our approach is to look into next district and expand. So in the process, we have stepped into Gujarat and Rajasthan already in the July month, and also in the Q1 we stepped into Jharkhand. So this is what we are operating, and probably we will step into one more state during this quarter. So our approach is to look at additional 20 to 25% of our branch enhancement this financial year.
All right. Thanks so much for joining us and talking us through the business outlook there, Mr. Kumar.